5 trillion with a T annual industry. They collect $5 trillion of premiums yearly. Okay, it's a huge number. I want to say it's maybe one of the top 5 industries that exist in the world. Probably rivaled with like defense and pharmaceuticals, healthcare, that kind of thing. Anywho, we don't have insurance as Muslims, and this has been a problem forever, and no one is close to solving it at all. Okay, and I saw this and I was like, the technology is a perfect match for this, solving this problem. That's when I started to dig more into insurance.
Assalamu alaikum. Welcome everyone to another episode of Taka Talks. I am Leila, your bonus host, and in today's episode we delve into the innovative world of Takasure, a community-owned mutual protection fund that is revolutionizing the insurance industry. Our guest speaker is no one other than Sharene, the COO of Takadao, who will provide insights into Takasure's mission, its adherence to Sharia-compliant, and the workings of its collaborative underwriting model. Welcome, Sharene. I am delighted to have you. And one question from the beginning: how does it feel being in that seat, the seat of the guest?
Yeah, it's a little strange actually, because now there's a bit of pressure because I have to do the talking. But then I have to say I've been doing a lot of talking lately, so I'm getting kind of used to talking, I guess.
Amazing. So let's just start from the beginning. You need no introduction, but in case it's the first time for some people on this channel, can you just tell them a little bit about who you are and where does this Takasure thing come from? What is it and where does it come from? What's the story behind it?
Okay, so thank you, Leila. My name is Sharene. I am originally from Singapore. I left after high school or secondary school, and I moved to the United States. I lived there, went to college for about 10 years, met and married my co-founder slash husband in California. We started our first business over there. We sold our first business over there, and then after that, we moved to the Gulf, to the Middle East. So we were first in the UAE, and then we've been there since 2005. So I want to say for the last 20 years, we've been back and forth between the UAE, and now we're based in Riyadh, Saudi Arabia. You asked me about, well, a little bit background about us. So we've always been entrepreneurs, and somehow it's very hard to talk about my story without telling his as well, because so much of it has been together. I know it's kind of cheesy, but it is what it is. Well, we've been entrepreneurs since our very, like, I want to say almost like the beginning of our history, right? So we started our first business in 2001, I think. And we've had 4 companies since. This is our 4th company together. The first couple of businesses were in sort of more traditional industries. The first one was in F&B. Then later on, we did import-export, which was connecting sort of Southeast Asia with Europe through the Middle East. And our previous business, which Leila, you're well aware of, was a company called Mel2, which was a peer-to-peer marketplace for secondhand items. We worked really hard on that. And towards eventually it got acquired by the local IKEA group, known as Suleiman Group. And then here we are today. And I want to say
quickly, I can say how impressive, mashallah, everything you've been able to do together. And of course, it will need an entire podcast on its own. But how do you start up 4 companies with your husband? Without losing your mind, like, how do you work together? If you had one advice to give to a young entrepreneur woman working with her husband, what would that be?
So I think, and I heard this from somebody else, by the way, and I was like, oh yeah, that makes total sense. Because we are both very obsessive about business and doing business and entrepreneurship, this is not only our day job, it is also our passion, it is also our interest, right? So I have no hobbies. My hobbies are all about reading books related to entrepreneurship or more things related to whatever it is I'm doing. So I'm very, and he's the same way, and maybe he's even worse, right? Because then all of his sort of social interactions also turn around this kind of thing. And so if you are people like that, then the person that you work with is the person that you're going to end up being the closest to and spend the most time with. And if that person is somebody other than your life partner, your spouse, you're going to have a problem. So it just happens that we are like that, and it works out that, imagine if I was very obsessive about my work and my husband is not involved. That would be very difficult because I wouldn't be able to speak to him about it.
Yeah.
And he would always feel like he's left out, and likewise,
Yeah.
vice versa. If he was that way, and so
That
I think
actually makes perfect sense,
that's just how it
mashallah.
works. Yeah.
All right, so sorry for that U-turn. Let's come back to the topic. Yes, the story. How did Takasure come about? Where's the story behind it? Please.
Yeah, so I wish there was like an exact moment that I can point to and say this happened in my brain and all these dots connected. But this is never how it works with me. It always is a whole small collection of events and discussions and interactions that somehow eventually lead to a certain direction. And then I go in that direction, I keep pushing, and I find whatever it is that I find. So some of the events that stand out in my mind, the first event was something that happened many, many years ago. So I want to say 15 years ago. We had a close family friend, and you also know her. This was in Ras Al Khaimah. And at the time, I think her youngest daughter was just a baby. She was still, in diapers, crawling around. And the oldest was maybe 12 years old. And there was a group, like a family group where there are a bunch of families who get together very often. And she was also my Quran teacher. Anyhow, her husband goes off for Umrah from Ras Al Khaimah, which is like, I want to say, a 2-day road trip, or more or less. And on the way back, he goes with a friend. On the way back, they are driving, and one of them falls asleep at the wheel, and they get into an accident. So essentially, the car, this is what I heard, the car drove under a big truck and was crushed, and they both died on the spot. Now, it was a huge shock, right? Because nobody expects this at this age and in this context. Because Umrah is something very frequent. People go all the time. It's not high risk or anything. And, the roads in Saudi Arabia are not bad. So when we heard about it, we were all very distraught, and we wanted to offer our support. So all our friend group went to her house the next day and to try to help her and, be there for her. And when we entered the house, the thing that was really striking to me, it was not a very big house, but it was rather spacious. It was 2-bedroom. There was a living room, and there was like a extra room, etc. And I remember it was just filled with people. We couldn't find a place to sit, literally. It was standing room only. And it was just all women from the city, from Ras Al Khaimah, who knew her, who came to support her. And they all came with some kind of help, mainly financial help, right? Because, she was not a wealthy woman. But they also came with other kinds of help. And the thing that struck me from that incident was when somebody falls and needs help, it's other people who help them. It's not a faceless corporation. It's not an insurance company. You don't get help from your banker at this point in time. You don't get help from the government. These are not entities that come and step up and help you. It's really your community. It's the people who know you. It's the people who have some relationship with you.
And if you think about it, it's the same way in many other parts of the world, right? Families that step up in this sort of events. SubhanAllah, yeah.
It's so obvious, right? And yet so strange to us today, because we have become less and less connected. We're so disconnected. We're so connected because of the internet and because of devices and stuff, but because of this connection, we are less connected. So these days it's easier to Zoom than to actually physically meet. So most people end up doing a Zoom, which I don't want to say it's still better than nothing, but at the same time, that physical interaction really builds relationships. So we've come to a point in history where I don't think before this point in time there have been as much disconnection and loneliness and those kinds of phenomena as before. So we've lost that community, right? But it is the actual thing that we need.
I would say especially in the developed world, or because in developing nations,
you're right.
It's still very tight knit. Yeah.
Yeah, you're right. You're probably right. So this is event number one. Then we talked about me and the startup that we founded. Now the startup Meltu, alhamdulillah, we exited. We did it was a good outcome for everybody involved, well, mostly. And the but it wasn't like, it wasn't like huge. It wasn't something that, changed a lot of lives in that way. However, what I learned from that event was that the power of technology to change and shape lives and to change the way we live is incredible. And I don't think there's anything else in the world quite like technology. And specifically in this day and age, computer related technologies. Okay. And I've seen the way in which a software program can actually change the way people live lives, right? So you can see plenty
Practically,
of
what do you
examples
mean?
of this.
Yeah.
Yeah, you can see plenty of examples of this. So in my time, so I was a child of the 80s. So I didn't grow up with the internet. I think I met the internet in 1997, America Online, and by which time I was almost an adult. So I am not internet native. So when we went to school back then, the only one who had the knowledge was the teacher. If you didn't know how to do something, you ask an adult, you ask the teacher. And if the
Mm.
teacher didn't know, you pretty much like, too bad for you, right? Today, there isn't any kind of knowledge that cannot be accessed by anybody. All you need is Google or ChatGPT or one of those things. So AI is a whole other story. But anyway, that's changed the way education is completely. You just cannot teach kids the same way because you're no longer the source of knowledge, and there's so much knowledge at your fingertips. And to be honest, memorization is no longer required. So this is an example of how technology has changed the world. But there are many others, right? So who imagined that we will spend more time on our phones than with other human beings, right? So a 6 to 8 hour screen time is quite average in the developed nations. So anyway, technology is incredibly impactful. And if you want to change something about the world, you want to right some wrong or some injustice, the best way to do it is through technology. So that was kind of event number two. Event number three is really the 2008 financial crisis. I was an adult by this time. I think I already had one or two kids by this time. And so this was when it was really a wake up call for me to understand the financial system. So I want to say that I went to school and I was a major in economics for the longest time, right? And I actually switched majors. I kind of quit in disgust because I was like, this is a useless science. It has no it's not connected to the real world. There's a lot of theories, there's a lot of formulas, there's a lot of models, none of which reflect anything in the real world at all. Okay, so when you actually apply the economic theory, like it doesn't work at all. So I was like, this is so stupid.
I did
Anyway, so I
like
thought
economics. We didn't delve too much, but supply and demand and stuff like that made sense to understand the word inflation and stuff like that. But yeah, and for the longest time, I thought you studied education actually.
no, that was later on. That was later on.
I
But as an
see.
undergraduate, I did economics. Anyway, I didn't graduate with economics degree, but anyway, not important.
So
So
you have that pattern actually. Great founders sometimes they are dropouts. So you dropped out of economics and you went into something else.
yes, definitely. So long story short, 2008 financial crisis. I thought I understood how the financial system worked because I studied all these models. But again, as I realized, it was useless because none of the models actually applied to the reality of the financial system. But that incident and the cause of that incident essentially was banks, insurance companies, Wall Street, investment firms. They were gambling. Okay, let's be clear on what they were doing. Don't call it trading, whatever. They were just creating money out of thin air. There was no productivity there. It was not the wealth creation was not tied to anybody doing anything that productive. They were just creating money out of thin air. They got so greedy that they kept doing it with no regard to the consequences, and they kept gambling back and forth. And in the end, they collapsed the world economy. Or they first collapsed the American economy, but because the American economy and the US dollar specifically is the bedrock of the world economy, they've essentially collapsed the world economy. This is a very small group of people who just got greedy and made so much money and did not, by the way, feel the consequences of this crash. Yeah.
Just as a layman understanding, what do you mean by they were gambling with the money?
Okay, so I'll give you an example. So the thing was caused by the subprime crisis. The word subprime refers to real estate loans. Okay, so the banks were giving out loans for people to buy homes, people that couldn't afford it. All right, that's why they call it subprime. Prime loans are loans to people who have more than enough income to afford it. Subprime loans are basically loans to poor people who cannot afford it.
Got
And you're
that.
wondering to yourself, why would anybody loan money knowingly to somebody who is very likely to default, not be able to pay? This is where it gets very nasty. So the banks were doing this because they were not actually wanting to make money from the loan. What they did was, as soon as they would get enough of these subprime loans, they would bundle them together and create a security of them. If you want to think about like a Bitcoin ETF type of thing, right? Except that Bitcoin has actual utility. But anyway, they bundle all these loans and they made it into a security, which would essentially, like you think about mutual fund, etc., which they would sell to the retail investor. Okay, so now retail investors are buying stocks in this subprime security. Okay, and I forgot what the thing is called. Anyway, and that is essentially just a bundle of home loans. Now, so far so good, right? It's not that bad. And in the back of the minds of the retail investors, they were saying, well, this is a pretty safe investment because there's a collateral there, which is the house, right? So if anything happens, we can repossess the house. And anyway, this is somebody's home. So they may not pay, like, I don't know, their insurance. They may not pay for the cable TV, but they will pay for their home because they live there. If they don't pay, they'll get evicted. So that was the thought process. So far, so good. That layer was fine. But there were a lot of, what the retail investors did not understand was that these loans were subprime. They were all rated AAA by the rating agencies because the theory there was if you have enough of these subprime loans, you've diversified them enough, then you are lowering the risk, which is completely nuts. All right. And they know it's nuts, but they didn't want to say it. So that just was the theory. So people bought into this and they were on the verge of collapsing. Now that in itself is bad enough. What was worse was they had a derivative of the subprime loan. So on the side, they created new products called CDOs. All right. And these CDOs were essentially saying, it was a kind of an insurance policy type thing, but they were saying, if the price goes up of the subprime loans, all right, you make money. If the price goes down, you lose money. Something like that. I'm really oversimplifying it. Now that particular product has zero utility. It's a gambling instrument. It's a tool to bet on whether subprime loans are going to do well or not. Period. And apparently, based on some numbers, it's like 1 to 20. So for every $1 there is in actual subprime loans on housing and property, there are $20 betting on it.
It's a bit like this futures trading in the world of crypto, right? But if I
Correct.
have to summarize my understanding, the foundation of the issue is really that they gave out these loans to people they knew were not able to pay for them, and so they built other things on top of it, but the foundation was shaky, and so at some point everything just crumbled, right?
Yes.
But then why didn't they just repossess the houses and of course that's terrible for the house owner. That's that's catastrophic actually for the end customer. But from the perspective of the retail insurer, why didn't they just repossess the house?
So we're back to economics 101. So because of this activity in the stock market, etc., the banks kept giving out subprime loans. They gave more than they should have. and the house prices kept going up, right? Because there's more demand in the market, so easy to buy. 0% interest, no payments for the first 90 days, or you can, all kinds of deals to get people to buy houses. So when you have such a high demand, prices kept shooting up. Okay. So now people were borrowing more and more money. Retail investors were putting in more and more money, and there was more and more money being bet on these things. The thing got really out of hand, became this huge bubble. Now, the first thing that happened was actually the banks went down, because the problem was that it was all concentrated in the banks. When people started to default, first of all, they would default on their homes, which were worth much more than what the actual value is. And when that started happening, nobody was buying houses. So even if they repossessed the house, what can they do with it? They have to sell it for it to make any sense. Nobody was buying. So the market just essentially imploded and crashed. And the banks were the first to go because they had bet on these things, and there was an extra pool of money that was just crazily circulating.
So this was
the whole thing just blew up in their faces.
So this was sort of your awakening to the global financial system.
We've gone down a rabbit hole.
But this is super important,
awakening.
actually, just also for the listeners to understand where you're coming from and why you started Takasure. So let maybe come back to that. The picture is clear now. You understand where Sharene was coming from. So jumping to Takasure, how did you think this would solve any of those issues? What is it first? And then how do you think this would solve any of those issues?
Yeah, so the lesson from that episode was I had a very deep distrust of these types of centralized institutions, right? And of course, I'm also a Muslim, so I'm looking towards my understanding. My religion and the rules of my religion to show me what is the ideal scenario, what does the ideal financial system look like. And maybe this is not very obvious to people outside of Islam, so like to non-Muslims. But in Islam, there's a huge sort of body of knowledge about these very things, about political systems, about financial systems, about how you live your life. So I want to say a larger extent than most world religions, right? Anyway, so Islamic finance is always in the back of my head. I'm like, okay, I don't know much about it, but I do know that it doesn't allow interest, and there must be something good there. So I come to, let's say 2022, we've sold our business, and we now have time on our hands to go and learn about other things. And I meet the blockchain and I meet Bitcoin, and I'm extremely skeptical at first, right? And this is not just in 2022. So when Bitcoin really started taking off, this was around 2015, 2016. And we met it at the time, we met some people who were talking about it, and I was like, whatever, sounds stupid. Who cares? Who knows? And I didn't have time anyway because we were deep in our business and I had just no time to think about anything else. But in 2022, I reacquainted myself because now the hype has gone down and it was the bear market. So I thought it was a good time to understand what happened, right? Again, hobby. And so I studied and I was like, wait a second, this aligns perfectly with the way I think about the world, right? Which is that large institutions are very problematic today. And so I was like, well, we should use this technology. And remember, I'm saying in my mind, I'm like, technology can change the world. We should use this technology to solve our own problems as Muslims of not having a good financial system aligned with our personal beliefs, in which we can actually become wealthy or to uplift ourselves. Because now, if you have a little bit of money as a Muslim, there's very little you can do with it. I mean, in traditional financial terms, right? Because you don't take interest. So that you essentially have to like buy real estate, and real estate has a very high ticket price. So you can't really buy real estate because you don't have enough money to buy real estate. And you can't get a loan because it's interest bearing and blah blah blah. Long story short, there's very limited what you can do as a Muslim with if you have some cash.
In terms of investment, so that's why traditionally Muslims have been very big on ownership. Buying this and buying that. But as you say, it's not everybody that can afford the full ownership of stuff out there.
Yes, exactly. so I read about the blockchain. The first thing that occurs to me was that this is the perfect technology to build a community-based mutual insurance fund. And obviously those words were not in my mind at the time, but I was like, oh, this is a great thing, a great way to do mutual insurance, because it's all about people coming together, pool their resources together, and then there's like a technology that runs the operations essentially.
So is
And I
it
was like, this is great.
the insurance part of it? Is it from your experience with your friend? Is it that you had some money and you thought, where can I put it? Why insurance though?
That's a good question. So insurance is such a problem for Muslims, like that you cannot, because insurance, the way that it is operated today is very much haram. There's a lot of problems with it. And we talk about that a little bit more, but so it's nearly impossible to get any kind of insurance. And every time somebody says insurance, like my hand, the hair on my hand stands up, like, oh, haram, haram. So I'm like, but it doesn't have to be, right? Because such things as takaful and like Islamic insurance do exist. So there is a way to do this. And the whole point of Islamic insurance is that it's a pure mutual. Okay. So give you an example, the very first known Islamic insurance is the system of Aqila, which was during the time of the Prophet. So this was practiced by the Arabian tribes. They would collect money. They would have a standing pool of funds that would be used to pay the blood money if somebody would kill somebody else from a different tribe. All right. And back in those days, if there was that kind of incident where somebody would murder someone, or manslaughter, meaning accidentally or not, and the other and not have the money to pay for the blood money to the family, there would be tribal war. So it was a very unique risk that the tribes wanted to avoid, and therefore they had this pool of money ready. That was the first thing. That was the first known insurance fund in the Muslim world, right? And the Prophet Muhammad sallallahu alaihi wasallam, who was alive at the time, did not object to this. So it's an implicit okay, because in Islam, when it comes to things like Islamic finance, everything is allowed except what is specifically disallowed. So by this ruling, we're saying, okay, this insurance structure works.
We'll be right back after the break.
Taka Talks brings you stories from around the world that will help you understand how crypto and Islamic finance can change our lives for the better. Subscribe and follow to keep learning.
So it's a problem for Muslims, but it's also a very potent financial tool. And if you look at the world today, insurance is a 5 trillion with a T annual industry. They collect $5 trillion of premiums yearly. Okay, it's a huge number. I want to say it's maybe one of the top 5 industries that exist in the world, probably rivaled with like defense and pharmaceuticals, healthcare, that kind of thing. Anywho, we don't have insurance as Muslims, and this has been a problem forever, and no one is close to solving it at all. Okay, and I saw this and I was like, the technology is a perfect match for this, solving this problem. That's when I started to dig more into insurance.
Mashallah, thank you very much. And I think as well for the Muslim community, it's an acceptance of the status quo, right? Generally speaking, we are not in the Western society, so people assume that if something happens to you, if the inevitable happens, then you have a family, you'll have a community, but that is not scalable. And of course, not everybody has that. So sometimes people think of insurance when they have kids, right? Before they have kids, like, whatever. If I'm not there, then I'm not there. But is it also the fact that you had the family at that point and you were thinking as well, what happens if I'm not there? Does that have to do with it? Because you went not for insurance, generally speaking, but you went for life cover.
Oh no, actually that was not the thought process. So I was just trying to, so the initial thought was just insurance generally. I'm like, there's so many things we can use this technology to create truly mutual and Sharia-compliant insurance. And I wasn't really thinking about life insurance. But as we started to build out the product, I was like, what is the product, or what is the asset class, or the vertical that makes the most sense in this context? And it was like, okay, life insurance.
All right.
Are there
So
many reasons, particularly?
yeah, let's do this actually. We've been, I'm sure at this point, they're very excited to know what is Takasure? What is this alternative? What is it, Shireen?
Yes. So we talk a lot about insurance, but in reality, Takasure is not insurance. Okay. It's really a mutual protection fund. It's a group of people who come together and they pool their money together, all right, to mutually protect one another. So it's like I would gather a group of my friends and I say, okay, we're going to put money together and this money is going to be used if something happens to one of us. That's at the essence what it is. Now, which is also at the essence what insurance is, by the way, but insurance today has been warped, so it's no longer like that. Now, here's the thing, right? If you really examine what the insurance industry is today, it's actually quite unpleasant. You have a company who, in order to make money, they have to not provide the service that they have sold to their customer. How does that work? In order for an insurance company to make money, they actually need to minimize claims. They have to pay as little claims as possible. And you as a customer, when you come to the insurance company and you pay money, you're paying for the service of one day maybe getting a claim. And so they are in the business of trying not to provide that service in order to make money. So it's a very bad user experience, which is why you have all these horror stories of people getting their claims denied, of people, of the insurance company essentially, lowering claims for a group of people just to see whether or not they can make more money. Anyhow, that is one problem. Now, the other huge problem, and this is a problem that we as Muslims face as well, is that insurance is largely unavailable. Why? Because this particular way that insurance is run is actually very expensive to do, and an insurance company is in there to make money, right? And so if it's not profitable for them, then they're not going to go in your market. And the example that I like to give is the market of Pakistan, because I know this came from an insurance insider. They told me the market of insurance in Pakistan is 70% B2B, because that's where the money is. 30% retail, only 30% retail, because there are not enough rich people to be able to pay for the insurance company to make money. So I'm like, this is a horrible, horrible thing. We actually don't need the insurance companies, because truly insurance is not meant to be centralized this way. From the very beginning, it was just a group of people coming and mutually protecting ourselves. So what Takasure is really the technology that enables people to do this. It's the technology that enables people to come together securely, pool their resources, their money together, and then the technology actually runs the insurance operations without the need for an individual or a centralized party or a company to actively manage the fund. And that's what we're doing. So what we do at Takadao is to build the Takasure technology that allows this kind of trustless insurance or mutual protection. I don't want to say insurance alternative mutual protection to take place. And yeah, that's what Takasure is.
Let me break it down for lay people who are hearing that for the first time. So you're saying it's a group of people that are coming together for the purpose of putting their money together, and if something happens to them, then that fund pretty much pays out some money to whoever. This is live coverage for now.
Yes.
So in
the first DAO. Thank you for directing me here. The very first DAO fund that we will launch on behalf of the people in the DAO is a life insurance or life protection DAO. The member journey looks like, is somebody wants to be a part of this mutual protection fund. Okay, they would then contribute money to the DAO fund. And when they contribute money, they will receive tokens in return to recognize their contribution. Now, these tokens are then staked into smart contracts, which will essentially, specify exactly what is supposed to happen in case something happens to this individual, in case this person passes away. All right. Then this smart contract has a validity of 5 years. So during this 5 years, if something happens to you, your family will get a payout. Now, after 5 years, if nothing happens to you, then your tokens get unstaked. And at this point, you can actually cash out from the DAO fund. You can take back your contribution from this DAO fund. All right. but you can take only what is remaining of your contribution, that is what is the underwriting surplus. So if there's any money left over after this period of time, it's redistributed back to the members of the fund.
All right, so that sounds incredible. So again, I'll just summarize my understanding. A group of people come together. In this case, for this DAO, which we should probably talk about a little bit, but I think it stands for Decentralized Autonomous Organization. They come together and they pool their money together. And if one of them dies in the period of their contract, then the family gets the payout. And now you were saying that the technology of the DAO takes care of all of the inner workings of that.
Correct. And this is exactly it's exactly as you said. So what we do is we built the Takasure technology, which, by the way, allows many DAOs to be created. It's not just a single one. And I'll give you some examples later. But we built this technology, and this technology is designed to run autonomously on smart contracts, and it doesn't require any human intervention. All right. Once it's going, it's going to self-adjust all the time, and it's going to make sure that it does what it's supposed to do. So you have two key enabling technologies there. So enabling technology number one is the underwriting model. Okay. And this is an algorithm that is designed to make sure that people get the correct amount of money based on their individual risk, as well as the overall portfolio risk, and to protect the fund so that it will never run out of money. That's number one. The other piece of enabling technology is the claims management. And this is where most of the complaints from insurance customers sit, right? They're like, well, it's very unfair, it's opaque, nobody knows. So we've created this technology that allows us to make the whole claims management transparent without actually disclosing private data.
So you've actually answered one of my questions, because from the previous explanation you've given, there was one obvious question. If I'm hearing this for the first time, it sounds very, kumbaya and communal, where people come together. But how do you actually make money, and how do you actually make sure that the fund doesn't, run out of money? That when I need it, it's there for me. So can you just double down a bit on how does the fund doesn't run out of money?
Okay, thank you for this. So we also exactly recognize that, right? So we're like, it's beautiful, it's very idealistic to have people put money together and protect one another. But then we know in these situations, because we are adults, that there's always some kind of friction that follows, or some kind of conflict that follows if the rules are not perfectly set in stone. And even when the rules are perfectly set in stone, people will still do weird things, and then you're going to have to go and fight about it. Not so, however, in the blockchain world and the DAO world, because the rules are now set in computer code. And whether you like it or not, this computer code is going to execute. So you cannot fight about it. And this is what our job is to design this computer code, design the rules of how this thing operates, so that it just happens the way it's supposed to happen, and nobody has to talk about it, nobody has to fight about it. Okay, so the number one thing here is money. And how do you make sure that everybody's money is protected, even though you don't have an external capital provider? So remember, the money in the fund is the money that is contributed by all its members. Nobody else is putting any extra money there to make it go
and it belongs to the fund
happens.
Members.
Exactly. And it belongs to the people who originally contributed to begin with, who are the members. All right. So we're saying, okay, in that case, we have to be very careful about payments and payouts in case somebody has passed away. So we came up with an underwriting system, which is based on two things. The first thing is based on individual's risk. So we say, okay, and like you, for example, Leila, young woman, living in a developed country, healthy. Leila doesn't shisha, she doesn't smoke. You're gonna get the highest benefit multiplier, which is somewhere in the ballpark of 600 to 800x. So for every $1 that you contribute to the fund, to the DAO, your family will get, let's say, $600 to $800 if something happens to you. Okay, and that's based on your individual risk and your individual circumstance. Now, the second risk that we look at is the portfolio risk. So at any given time, you don't actually know who's going to be in the fund, who is going to be a member, because we try to be as inclusive as possible. So we have a certain assumption based on, population statistics and our own research. And we know that, okay, based on these assumptions, the loss ratios or the amount of money that should be paid out at any given time is going to be X, right? And so if the loss ratio is at X, then everybody gets what they're supposed to be, what they would, the amount within the range. However, the loss ratios increase, then we have to adjust the benefit multiplier to the lowest part of the range for everyone across the board. And if the loss ratios decrease, then we can increase the benefit multiplier for everyone again to the top of the range for everyone across the board. And this is how you keep adjusting so that the fund will never run out of money.
So I have loads of butterflies coming out, a lot of questions, but let me just summarize my understanding. So it's pretty much monitoring very closely the loss ratios and adjusting to make sure that the benefit that people get out are leveled out and the fund never has to pay out more than it can, to a point where it's dry, pretty much.
Exactly.
So another thing I'm getting out of this is I don't see the middleman. I don't see their insurance company. So I understand the involvement of Takasure or Takadao is this the technology part of it. So who, for example, if there is a claim, who manages the claim process? How does it work?
So we're going to get to claims in a minute. The first thing to understand in this particular context is that as you said, there's no middleman. You can imagine how something like an algorithm that is constantly monitoring and self-adjusting is actually better done by computers than human beings, right? Because it's 24/7 versus human being who's only awake for a certain amount of time. So there's no middleman, and this is all done on smart contracts, which are open source, so everybody can see exactly what is being done and how the calculations work. It's particularly important for this context where you're asking a bunch of strangers to come together and pool their money together, right? The strangers need to know they can trust each other. Again, we're trying to avoid conflict. So with any algorithm, right? There is if you imagine when you start an engine, at the beginning you need to put in a key. And with any algorithm, at the beginning, you need to put in some variables to tell the algorithm, okay, this is from the point at which you start from. Now, these are the only things that can be changed in the algorithm, but it cannot be changed by us. The only people who can change these variables are the people from the DAO, all right? So the members themselves. And so in order for these variables to change after the thing has started, we actually need to launch a new smart contract. So we kind of have to restart the thing. And that can only happen if the entire DAO agrees. And this is through DAO governance and DAO voting. And so that part is clear. Now, when it comes to claims management, this is the other big problem that traditional insurance faces and that we try to avoid in our mutual protection fund. And so what we're saying is, okay, we're going to make a process, or we've made a process, which is completely transparent and is actually run by the membership of the DAO itself. So people in the DAO, they opt in to become a verifier. And so they're part of this verifier program. And whenever there's a request for a payout, all right, it will be pushed to a bunch of different verifiers. Okay, so there'll be a group of, let's say, 8 or 10 verifiers who don't know who each other are. So this is a double blind process. No, I don't know you, you don't know me. And a small piece of information will be given to each verifier for which they have to do their individual verification. And then everybody comes together, collects their results, and obviously this is all done through computer code. And there's an agreement based on the rules that we've set, whether or not this payout should be authorized.
This is actually mind-blowing because the more you speak, the more I understand why you said it's not insurance. So members are actually involved in decision-making, and they are deeply entrenched into the claims management process. And so at some point, it starts to seem to me that, there's no insurer/insured is exactly what you spoke about in the beginning. It's the club of people that come together and that take ownership and actually management of this thing, right? So, and it's just clearer and clearer to me, because my subsequent question was, why do we need Takasure? And we already have Takaful, and it's sort of Sharia compliant and stuff like that. But I see more and more, because I've had experience with Takaful, that the way in which you involve the members is actually completely different. Takaful is still risk sharing. It's not as conventional insurance, but there you have that centralized authority there, and there's a lack of transparency of what is happening, what's the fund. And I personally never got any surplus. So yeah, I now I start to understand. If you can just double down on that. Sometimes people think, if I'm going to put in $1, as you say, and my family can get 600, then it's not Sharia compliant. Aren't there Sharia issues with, of course, the model is run by its people, its technology, and what have you, but in that concept, that very concept of I put in a little bit and I get more, aren't there Sharia issues there?
Yeah, so this is another excellent question. So essentially, that can be construed as riba. So if you pay somebody an amount of money and they return you for a higher amount of money, that is a form of riba. Okay. But that particular constitution exists only in the realm of commercial contracts. So this is haram and this is riba only if there is a profit incentive in this transaction. So you pay this person and this person is doing it as a business for a profit, okay? Or you are doing it as a business for a profit. But in this mutual protection scenario, you are voluntarily contributing an amount that is essentially donated to your fellow man, the rest of the people in the community, if something happens to them. So from the day one, your intention is to say, I'm putting this money there, and if something happens to somebody else, I am willingly donating it to this individual. Okay. And so all of you have come in with the idea of this is not a for-profit commercial transaction, and therefore this is not an issue.
That makes perfect sense. Then the other aspect of Sharia compliance is generally investments, right? So I assume that the fund is not static. It's not just living off of people paying membership, so becoming members into it. So two things in terms of money. Number one, members have to pay. How do what's the role? I can see Takasure, but I want you to give us a deeper explanation. What's the role of Takasure? How do you guys make money? How much do members have to make money? And how do you actually invest that money in a Sharia compliant way?
Yeah. So to be clear, this is a mutual protection fund. So it's not an investment in any way, shape, or form. So if somebody wants to join the fund, they don't join it with the intention of, I'm going to make money off of this. No, you won't. You will not make money off of this. You will simply be part of a group that, if something happens, you guys will help each other out. And what Takasure there is to ensure that the rules are being followed and that there is no conflict between the people. Now, then how do we, the company Takadao, who, is developing this platform, how do we make money? Well, for us, it's really quite simple. We take a 20% fee for the use of the technology from every contribution. And that's it. Once our fee is taken out, all the rest of the money belongs to the DAO fund, belongs to the members, and we never touch it subsequently because actually we have no ability to. Even if we wanted to, we cannot. And so that's how our business model is. Now, as far you brought up a really good point, which is like whenever there's a very large pool of money sitting there, it's kind of a wasted opportunity not to invest it and to do something good with it, right? So in that respect, we actually have certain options for the DAO to elect what they want to put their reserves into. And those things are being worked out. So that is not our focal point today. Our focal point is making sure that the risk management and the sort of payout management is well taken care of.
Got that. Thank you very much. And just one last point, because one thing that blew my mind is really the technology behind all of this, right? And my understanding is, you said in the beginning, this is the first DAO. It could apply to other things, other DAOs could be created. And we've seen, as insurance companies pull out of some areas, as people need different things, it just means that people can literally come together and start these different DAOs, and we can have all of these different DAOs all around the world. But how do you make sure that in using the technology that you have created, people keep it to Sharia compliant DAO missions?
So essentially, the technology is built entirely Sharia compliant. if you use the technology without changing anything, you can't really get out of Sharia compliance. Now, obviously, if you take the technology and you remix it and you rehack it and you do something else with it, after that, it's not our problem anymore, because that's not our technology anymore. But it's built from day one, and again, it's on smart contracts, so it cannot be changed. If you want to change it, you have to change it, then relaunch smart contracts, right? So it's built from day one to comply with Sharia compliant rules. So that's all I have to say about that. Now, I wanted to actually talk about one thing which somebody asked me yesterday. They'll be like, okay, but if you are kind of in order to manage risk, you're excluding people who have high risk, let's say cancer patients. Isn't that very unfair? And actually, this is exactly why the technology is beautiful, because in a normal human population group, yes, you would exclude cancer patients because they are very, very high risk. But with this technology, you can actually now create another community DAO of only cancer patients who can now have their own mutual protection DAO. And in this particular cancer patient DAO, for example, the risks there are much higher, the payouts will be lower, but all of them have the same risk, and so they will be willing to share this risk together. Another example is somebody in our team dug up alien abduction insurance, right? And so I'm like, okay, you can also create a DAO for that. If you find enough people who want to be insured against alien abduction, well, all we need is the underwriting inputs, the data. We can create the model, and they can create their own DAO. So this is the flexibility of this tech.
DAO your own way. I think we should coin that. Thank you so much, Sharene. It has been an absolute pleasure. Of course, we had much more things we wanted to discuss, but we have to be mindful of your time and the time of the listeners. Thank you so much, everybody, for tuning in. Don't forget to check out the other episodes, like, share, comment, subscribe, and do all of that good stuff. And I hope, you can tell us your feedback on this. I don't even want to say it's a new way. I think it's a new way of doing community community protection, but it has been there for a while. It's just bringing the blockchain to it and making it sustainable, making it secure, making it transparent and accessible to anyone all around the globe. So thank you, Sharene, for your time, and thank you to all of the listeners for coming through to the end, and have a great one. Assalamu alaikum, everyone.